we go.
What is up, my fellow traders? Today's strategy that I'm going to be teaching you works in all markets, from NASDAQ, as you see here. It even works in Forex to trading Bitcoin and other assets. But did you guys know that the market is in a consolidation state 75% of the time? It is only trending like this 25% of the time, where you see it making clear higher highs and higher lows in expansion type formation 25% of the time. The rest of the time, it is in a ranging environment, consolidation, holding pattern, if you will. If you take a look at any chart and you zoom out, you'll see that, oh, well, it's been in a holding pattern for a long time. There is price legs inside of it that are trending, but the majority of the time, price is in a holding pattern. And in those holding patterns, most traders get wrecked. I don't know about you, but I have been absolutely wrecked in consolidations many of times. It took me a long time to figure it out, but I figured it out, and I want to pass this on to you guys. So you have to have you don't have to, but it's definitely going to help you to have a set of rules and a clear, defined, easy to follow strategy, just like this one. So what is a range? A range is a holding pattern where you see price. It's going to create a large swing in the market. You'll have like a downswing and then an upswing, and this will set the high and the low. Some people refer to this as external range liquidity. So we would mark this out as our highest high, and this would be marked out as our lowest low. Now, you should not expect this high and this low to be taken out. I understand a lot of you guys are probably ICT traders, very familiar with how you guys trade. The external range liquidity is a very, very powerful concept. So we have our external range liquidity mapped out. We have our highest high and our lowest low. Now, there's going to be swings that are going to be happening in this consolidation, but they're not going to be taking out this high and they're not going to be taking out this low. So what we're going to do is we're going to grab a Fibonacci, one that I've pimped out. I have customized it here like this. So in ICT concepts and other concepts, they would refer to as 50% as your premium and below 50% your discount. But I personally don't think that works very well. And I want to show you guys how I look at price in a ranging environment. It doesn't mean PD arrays don't work. I'm not going to argue that point here today, but what I am going to argue is that I don't think in the middle here is discount, whether it be above or below the 50% line. I would consider this for institutions to be discount and this to be too expensive. So holding patterns exist for a couple different reasons. Most of the time it's going to be for institutions to offload liquidity. So what they do is they will put a limit order to sell in this area up here, or another firm will have a limit order to buy, or they put a buy and then sell up there. Institutions trade level to level. They're not really concerned about the middle of the range. They're only concerned about the hard right edge. So I don't know if you guys have ever heard this saying. It is a market profile saying. It is something that some of the old timers in the game, you guys watching the video, I'm talking about trading on the hard right side of the edge. This is where your high probability trades exist against the external range liquidity, because we should not expect external range liquidity to be taken out, right? But the problem is you don't know if it's going to come right up to the high. You don't know if it's going to double top. We do know that they like to set traps for traders around these edges on their hard right edge. So how to identify external range liquidity and or so you can draw out your range. Let me show you the settings I have set up here. So we have the first one being 0, which is gray. The second one down here is going to be 1, and it's going to be red. That's going to give you this here. And then the third one is going to be 0.25, which is going to give you that here. And then this is the key. You need 0.75 turned black for the middle of this here. This gives you a quarter half, right? This splits your range up into 25, 50, 25. Now, if you don't see numbers there, you can come down here and change that. You just change this, click levels, and then change it to values. No, never mind. I guess it doesn't really matter, does it? It's the same either way. All right. So then that's it. That's all you got to do for this. It's really simple. So now we're going to identify the external range liquidity. You're just going to like zoom out and see where the highest high and the lowest low are within a range. So you're here, right? Beautiful. So now these two we cannot count as trades. These are not trades. After this low is set and then price pops up into it, we can though. Once you drop down, you can easily find these areas of price where it starts ranging. In NASDAQ, because of its volatility, offers great risk to reward ratio trades. So on the lower time frame, when you see a new higher high, so if we look here, you have a new higher high that was made right here, mark it off, clone it. And then the lower low that was made, which would be, this was your lowest low in this range here. So now we have a clearly defined range right here. Now we can't start trading it, and we could start trading it back here, right? There's nothing wrong with that. The lower time frame for traders like me is going to be much better. You can use the higher time frames for really great entries into swings during the day, which is definitely powerful. But this is going to offer you just really high reward trades with very little risk. So that's why I wanted to start with this here. Now, if this box, if the red zone is too big for your stop, then what you're going to do is make it smaller. So 35 to 16 is way too much risk for me. I'm not trying to trade with a 15-point stop. So let's go ahead and make it smaller. We're going to go to, let's cut it in half here, and 80. And now we've just cut down our risk substantially. Less trades, but you will have much less risk on the table. So once we have our price leg here, now you can use a different couple ways of identifying where price has stopped trending. I would use just market structure. You have a higher low, a higher high, a lower low, and then now you have a lower high followed by a lower low. So for me, this right here would signal that price is not going to be taking out that high anytime soon. And then now you can trust that this high is not going to be taken out within at least one test. Sometimes after it's been tested a few times on a lower time frame, it will break. But for right now, this is perfect. So now price comes back into there. It's kind of testing this high, stays within our range. It shows some bearishness there, taking out the trend. We're going to sell two, and we're just going to target halfway of the range. That's it, just halfway, because our risk is very small here. It's 7 points. So a winning trade right there, boom, money. And now if it comes down into our red zone or our green zone again, we can go ahead and trade it again. So there's another touch there. I'm gonna go ahead and sell two. Stop loss goes up there. It's a little bit too much risk. I would take off and just trade one contract on this or go to micros. I'm gonna buy one back. And then we're just gonna play it forward here. Now, obviously, there's our touch right there. If it shows any kind of bullishness here, just go ahead and exit. So we'll just call this one a small loss. All right, so now it's came back up there, actually popped the top. So now all we're gonna do is move this up. We're gonna go ahead and sell short. Stop loss is going to go not all the way up there now because it's too much risk. We're just gonna go like small risk like this. And then we took a stop out there, we re-entered because the risk to reward ratio is so great that you can do this. On the higher time frame, the win rate is going to be much higher. All right, so there's our target. Obviously, I would scale out if I was doing this in real life. We need to go back right there because we just had another touch into our area. Sell to, stop loss behind structure. I was trading this, I would definitely exit full there. Let's go forward here. Oh, We almost had our first green touch there. No. All right. So now we have our first green touch. We can go ahead and buy there. Prices hit the profit target. I personally would just scale out, sell one, and then read the market, read the price action here. All right. So price is clearly rolling over there. Go ahead and exit. So it's just in the middle, fiddling around. All right. So we have a new higher high. This is an expanding range here. So we're going to go ahead and sell short here. Stop's going to go not too far up there. I don't think it should go back up there again. Let's give it a little bit more room here. It seems like it might not be enough. Let's go to $300 of risk because our risk to reward ratio is so fucking big. And because what is this on an average trade? How much are we risking for our reward? Obviously, you can tone this down with micros, which is what I would probably do because the range is so wide. But our average, our trade is 5.6 or so. You know, we could even say it's a 3.5. That means you could lose 3.5 trades and win one, and you would still be profitable. So I would definitely scale out right there, buy back. This is at the New York opening here. So it's a little bit more volatile. So there we go. Go ahead and exit there. All right, so price went into our area, pulling back, go short, stop goes right up there. So take one off right there as it pushes down, scaling out, locking in the winning trade. If you don't do that, you'd be giving back everything, right? So then as it curls up here, I would definitely just exit break even. All right, now it's back in our range. Go ahead and sell. Stop goes just above here, keeping our risk under $500. Stopped out, sell again, same thing, winning trade there. So you see the loss is like $300, $400, $500, but the wins are over 1,000 because of how volatile it is. Obviously, this would be a lot harder in a live market environment. That's why I think teaching in this kind of environment is just kind of silly. It's like playing a video game and being like, here guys, watch me play this game. You guys see there. So this probably has a little bit lower of a win rate, but you can see I made $4,000 in not that many trades. So you got 1, 2, 3, 4, 5, 6 trades on the low. On the high, you have only 1, 2 trades on the low. So 7 trades, $4,000 gained. All right, let's check back up on my Bitcoin position here. Probably gonna need to exit here. 115% gain. And this is clear expansion down into stopping action. You're going to definitely want to exit your short into that. If you're not familiar with what I'm talking about there, if you haven't seen the video yet, I uploaded a video just earlier this week where I went over this. It will be in the right-hand corner at the end of the video. You can check it out there. But it is an absolute game changer, and it goes so well with what I'm teaching here. All right, now let's get to the high time frame stuff here. We'll go ahead and turn off replay mode. All right, so I want to start with the latest price action from this week. So if we look here on, let's say, a 10-minute chart, and clearly identify this range here. We're just going to take the newest highest high and the newest lowest low, like we did on the low time frame. Boom. Boom. Because price was doing what? It was ranging, guys. It was a ranging price action. And then we're going to put our target in the middle. Doesn't have to be precise, just in the middle here. And then now we're going to go into replay mode. So now that we would start here, and then we're going to drop down to a 3-minute chart. Let's play this out. All right, so now we have our first touch here. Sell to, stop loss behind structure. All right, so price immediately reverses out of it. There's our profit target. But because we are on a little bit of a higher time frame here, we can trust that price isn't going to wick back up into here and stop us out. So we can take off one contract here and use the market structure to tell us when to exit. So there's our target. Boom. Back to the middle range. Like I said, we should not expect this to be broken yet. So we'll go ahead and exit. We would have exited as it went into here, right there. Buy one back. All right, so we made $160 off that trade. So now we have it dip back into our zone, but it wicked up really fast without us. All right, so we can safely enter here as it curls up, especially because it's in the mid-afternoon. We buy two, stop behind structure. So there's our target. We can go ahead and exit there. and sell short. Stop goes above structure, and we can take off one there. Because it's a higher time frame, we should expect price to continue ranging in the range. The lower time frame is different because of the amount of candles. If we had done that on a 1 minute, it might have been different, but 30 seconds is very wild. All right, so there goes price down. All right, so there's our target. We're not going to press it here. We're going to exit there. Now we can go ahead and buy as it comes into here. Stop goes below structure. There goes price is pushing up just like we want. All right, so we can go ahead and scale out there. If it comes back in and touches our area, we can just go ahead and rebuy it there. So there's our target breaking up. That's like expansion taking place here. And it's taken out the previous high twice. So we have a high, lower low. It's a broadening formation. It's probably likely to go higher. So there it is now. That's it. Now you would not trade this range anymore. Even if you took this one and you scaled out here at the halfway mark, like I just taught you guys, you would still be profitable. If you saw a price come up and start looking bullish, you would just exit. So no losses there. See the difference between time frames here? Yes, the market is fractal, but there is a little bit of a difference between the time frames. So just so you guys know that I 100% believe in this strategy, I'm going to take a live trade in Solana. So you can see there it's clearly came into the top of the red zone there. And I'm just going to be targeting the middle 50% there. And I'm going to enter in a little bit more of the position here, size up, make the risk a little bit higher. The stakes are going to be higher. I'm going to go ahead and add in here. I just want to make sure first it is in fact going to go down. But yeah, it's came into the zone just like I taught you guys. It's exactly what I just All right, guys. So profit target hit right here, blasting through it. This is a live market. You can't have replay on Jupiter.
Wow.
I'll even refresh the page here. Refreshing now, loading up. No replay, $100 gain. It's not like a huge gain, but for 100 times leverage, 32%. People trading stocks trade all year for a gain like this, literally all year, and they don't even get that. They're just trying to get 6 to 12% in an account. I'm able to get 32% right off the bat. So now that it's at the halfway mark, which is right here, that blue line, I'm going to go ahead and take off half here. As we talked about, scale out, lock it in, guarantee a winning trade, Bitcoin trade. If you guys want to learn more from me and trade with me, you can check out my Discord. I live stream every single day. And on top of that, I'll be doing a weekly mentorship with homework, classes, review of homework, PDFs, and quizzes on top of that. This is so that new people that come in my Discord has an opportunity aren't left in the to dark, learn my strategy in depth and the way I look at the market, the way I trade the market, because I do it a lot different than anyone else I've ever seen. So there is no, oh, it's just, or watch this video online, because there's no video online because I don't share it publicly. So you see me there closing it out for a very, very nice gain there. I am a funded trader. I'm currently funded with Take Profit Trader, Fast Track Trading, Apex Trader Funding, and Bullnox. All those companies that I listed off are on my website, and I have the best discounts in the game. But I have a website, guys, that is just for you. I made it just for traders that were like me, that were coming up. Luckily, you guys are a little bit in a different position. When I was coming up, there was no real information about funding companies. There was a few funding companies, but the majority of them were pretty shady, and there just was no information about them. So what I did is once I found some companies I could trust, I started this website, verifiedfundingcompanies.com. I have the best discounts in the game. If you want to get funded, I recommend you check out my website. Come over here to Verified Trader Funding Discounts, and then I have the best discounts in the game with the best companies. If you want to sign up for my newsletter, it's a bi-weekly newsletter where I give you tips and tricks, how to get funded, how to trade properly, like psychology about trading, mastering the mental game, that kind of thing, and strategies. Everything a trader really needs to know that isn't being talked about by other people. I'm willing to stand up and say, hey, this is what's actually happening. This is what's going on. Because, like I've been saying this whole video, I'm an actual trader. I know what you're going through. I've been where you're at. I know your pain. I know your struggles because I'm a actual trader that trades for a living. I would bet that 75% of the guys that are on YouTube, Twitter, don't need to trade. They don't need to. They may want to, but they don't need to because their income from their sales of their courses, their YouTube revenue is very high. Some of these guys just from Twitter alone are making more than most people work at their job in a year. Then you add in YouTube, you add in a course, you add in a Discord. Now you're talking $1 million plus a year. So they don't need to trade. That's why you don't see them putting their capital at risk when they're teaching you. But me, yes, I have a YouTube. I make about fucking $20 a month from. I don't get paid from Twitter. I don't have a course. I have two moderators that I pay for my Discord that are leaving maybe 25% left over after taxes, after everything, 25% of the total revenue of the Discord. And I'm putting that back into my channel well, so no money is coming from you guys, right? It's all coming from my trading. So hopefully I see you guys on my Discord. I do stream live every day, like I said, and you're going to want to get in on that mentorship before it starts because the price will go up. Like I'll probably double it from where it's at right now. I'm streaming 40 hours a month, guys, and I'll be doing a mentorship on top of that. So you get 40 hours of streaming, you get a mentorship, and then the community is fire. I have my market masters, a group of guys that have been with me from the very beginning that will answer your questions how I answer your questions, and they will be there helping you guys if I'm not. So come join me and let's get this, guys. Let's get rich together. Let's do it. Peace out, guys.